Olga Feldmeier.
Olga Feldmeier from Xapo, Bitcoin wallet.
Yeah, Christoph Jensch from Ethereum.
Mervyn Maestri from Digital Strategy at EY.
And Annika Schröder from UBS Group Innovation.
Check.
So great to have you here. How many in the audience over here actually know what blockchain technology is?
Oh, that's good.
So I did see a few hands down. So I'm going to ask you, if you'd have to, because you're technically developing blockchain technology, if you would have to explain to a child what it is, how would you try to explain it?
Well, is it on? No. Yes, okay. So to a child it may be a little bit hard, but I would call it a distributed permission ledger. So basically a ledger which everyone can have access to, everyone uses, and it manages who has the right to do what. For example, to move cryptocurrencies, therefore it's used, for example, in Bitcoin to move as a currency, but it can also be managing other rights or permissions. But it's distributed, everyone has access to it, and this makes it very secure and safe.
So in a way, very democratic.
Yes.
Now, this democratic force, if you so will, what does that mean? How is it disruptive? Because so often blockchain technology today is put into a headline with the word disruption. Olga, you're from Xapo, you're one of the most prominent startups in the space. How are you disruptive, and how is blockchain technology disruptive?
Well, you know, there are many things. Actually, Bitcoin, you cannot compare Bitcoin to anything that happens in financial services industry in the last 15 years. It's absolutely new system and platform. In which way? Basically 2 points. First, it's decentralized. There is no need to trust one company. And it's, if you want to look at it like a payment network, payment system, it's a payment system which has its own unit of account, Bitcoin, right? And with those two special qualities, this system can be built in a very efficient, very cost-efficient and time-efficient manner. You can move money almost for free anywhere globally. What does it mean? It means that for 2.5 billion people worldwide that never had an access to banking services, now it's possible to give this to them very cheaply and efficiently. And this is what Xapo tries to achieve, you know. It's like with mobile phones, right? Did you know, guys, that ever in our history, only 1.3 billion people had landline connection, phone, right? And now, how many have mobile phones? 6.3 billion. And the same way, like developing countries, they leapfrogged, you know, from no phone to mobile phone. The same way, hope that people in emerging markets that have never ever access to banking system, they will leapfrog into our mobile banking platform built on Bitcoin blockchain.
Now this sounds terrific. What does that mean for the more established banking industry? Annika from UBS, how are you thinking about blockchain technology? And I mean, maybe explain briefly, you're working so closely with it every day. So how are you seeing it develop and also reshape the existing financial industry?
So we think that blockchain really is the biggest disruption since the internet. Basically will do the same thing to the to financial services as the internet did to communication. So the effect will be massive. We think that blockchain will be the enabler for making financial services cheaper, faster, more efficient, more cost efficient for us as banks, but also more efficient for our customers. And it might actually create whole new traction in terms of volumes of assets exchanged across the world. So this is very interesting for us. We really believe in it, and therefore we see it as almost as our duty to explore this technology, not only for for our own benefit, but also, of course, for the benefit of our clients. And basically to run experiments, to develop standards, to share them with the industry and the wider community, to talk to regulators, to cooperate with the ecosystem. And we are doing so in our blockchain lab, which is situated in level 39 in London.
So we're going to go into the whole idea of how corporates are working together with startups in a little bit, but you're not only looking at the financial services industry from an EY perspective, you're working with clients in all kinds of industries, exploring essentially the future potential of the blockchain technology for places you might not even expect to find it. Can you tell us a little bit more about some of the innovative applications and potential future business models you're exploring, and in what industries, and how you think that might change not only the financial industry but other ones as well?
I think the blockchain in the financial industry is probably a very good application, because you're talking about a digital good. Money is essentially a digital good. But you explore that a little bit further and try to extend that into other industries, you realize that the world has become, we as consumers and users have become very much disconnected with the material world. So we use money, we transfer it automatically or digitally, we buy food, no one knows where the food comes from exactly. So to give you an example, how many of you know what Manuka honey is? It's a specific honey that's made in New Zealand, and in the UK alone, more than twice the amount of Manuka honey is consumed than is produced. Yeah. Which means that food forgery, the supply chain in food, is really on the rise, and consumers have no way of knowing what's in their food. So I think one of the big areas people are looking at blockchain is to make sure that you use that authenticated incorruptibility of the blockchain to make sure that your food is safe. So especially if you've got a young child at home, you want to make sure that there's no poison in the food. Yeah, you think back to the melamine scandal of in China, where they put melamine into baby food. So I think the food industry and the supply chain is one key area where that's happening. I'm doing the digital strategy for one of the automotive suppliers, and what we're looking at there is how you put together the automotive part in the car with maybe the electricity that's provided by RWE, and looking at the business model that someone like EY as consultants can create, and putting together the whole ecosystem. So working with RWE, an automotive company, Ethereum, and EY together to make sure that in the future an electric car will be driving on the road, and you can stop and charge that car anywhere and pay for it automatically using the blockchain. Because I think what Christoph mentioned earlier, one of the key things about the blockchain is that you can't sell the same good twice. So if you would speak to a child, if you've got one sweet, yeah, you can only sell your sweet to one other child to eat it. You can't sell it to 10 children because you've only got one sweet. So I think the blockchain makes sure that you cannot defraud the system. And the power of that application would probably be something like 2007, 2008, when the financial services industry was in a meltdown and it was completely opaque. No one knew where the assets were, no one knew who owned the assets, no one knew how toxic the assets really were, and most of these sort of very intelligent bankers didn't have a clue. And I was working for a bank at the time, so yeah, no one really had a clue about that. So the blockchain, the key things about the idea that it's incorruptible, you can only sell a good once, and you know who's selling you the good, and you know where the good came from. I think are really some of the key things that we are applying across all industries.
Thank you so much for that summary. I think that really brought it to the point. Transparency is a huge part of also what drives you personally to develop this. What is your vision as you develop this technology. What is your vision? How will this change the world? How will this change not only the financial industry, but, as you've heard, the food industry, and who knows how many more?
Yeah, so there are so many applications, it's hard to pick one of them, because it's just a technology which can be used for a lot of different things. For those reasons, like transparency and that's not corruptible and all those things. But for me, it's also very interesting to think about the Internet of Things, which also talked a lot here at CeBIT, because today a car cannot get a bank account. All humans can. But with the blockchain, the car can get something like a bank account, can pay for the parking slot, can pay for the energy, and also other devices, smart locks and padlocks and other things, can now be enabled to receive money, to send money, to enter into agreements, and is all of this completely transparent so that everyone can have a look at what's happening exactly. So from a regulator point of view, actually they can see exactly what's happening. So it's actually a good thing if done right. So there are so many potential, and we're just starting to look at it and see what we can do with it.
And you're nodding enthusiastically. So what's your vision? I mean, you have basically a wallet that is a very important part of this sort of future development. Where do we hold it? How will Xapo help to shape that future of other industries? We've heard a little bit about the locks, but what about Xapo? What is sort of your piece of the puzzle that you want to add?
We are the building block, you know, we are the infrastructure company, like on the road, you know. We are basically building the payment platform, right? With wallet, how do you pay between people? How do you pay, you know, merchant? How you can roll out, you know, this global payment network in the way that is efficient, you know, and that people in developing countries can use, everybody. Not just somebody who is privileged enough to have bank account, but everybody. And this democratization of finance, this is actually what is the mission of Xapo.
And so if we look at the, we've talked a little bit about the ecosystem thinking here. To what degree do you feel, and I'm, any takers here for that question, but to what degree do you feel that the startup side is talking to the corporate side, and how are you interacting? I mean, also Level 39, an interesting way of shaping that interaction, but how is this happening really on an ecosystem level?
Well, we actually are the first global bank to get into Level 39, which actually wasn't that easy, so we're very happy to be there. I think it's one of the biggest accelerators in fintech that we have in the world. It's a great location. You get a lot of interaction with the startups. You get a lot of collaboration with the startups. You exchange views. You talk about standards. So this really happens. This really helps us a lot in our daily work there. But it's not only the startups that are important, it's also the trade associations, it's also the regulators. We talk to universities that do research in the field and in nearby fields such as digital identity. We talk to other banks, we talk to consortiums, to industry partners. So it's really the whole ecosystem that counts. But of course, the bank versus startup relationship has become much more important than a couple of years ago, and this is a good thing.
I might add to that one thing. I think that the challenge here for big corporates is that the blockchain is kind of changing their backbone and not their front end. And changing something like this takes time and a lot of consideration, and also from the business model perspective. And startups can be much quicker to adopt because we start right away with this kind of model. And this is why I think, like it always is, startups are very quick to use those technologies, and big corporates, and they should be slow because they need to be very cautious about what they are doing. But I think changing the backbone is a big challenge here, and how, but also on the blockchain we can all interoperate with each other, because as from a developer point perspective, one could call the blockchain one big open API where anyone could have access to and interact with all the other players, no matter if it's startup or a big corporate. And that's actually how it brings all those things together again.
I think just one of the other key issues about the ecosystem, I think what we find with most of our clients is that it's very seldom that a company, an established traditional company, has the capabilities has the capabilities for innovation, as well as the capabilities to run a business that is quite old and traditional. And I think one of the things that's really quite useful about the new concept of ecosystems with the digital strategies and transformations that are taking place is that you can put startups together who are quite innovative, they're fast moving, they're less hampered by these sort of old-fashioned structures that most corporates have, and you can still give corporates the possibility to take part in this innovation that's happening, because banks, what banks do, I think in about 5 or 6 years, any blockchain startup, as the technology matures, will be able to do. So if they don't get involved now, a large part of their revenue and a large part of their profitability is at risk, if not gone. Yeah?
Can either you or Anneke give us a very concrete example of how some of that collaboration is happening from some of your personal work, perhaps even?
Absolutely. So one example for collaboration is our participation in the R3 consortium. This is we were one of the first 9 members to join this consortium in September 2015, along with other banks like Deutsche and Goldman and Credit Suisse. We have joined forces with a startup that is looking to develop standards in distributed ledger technology. And this has actually grown to a large community of over 40 participating banks today. So this is something where collaboration is already live. We have different working groups that work on different lenses, which is, for example, the business lens, the regulatory lens, etc., to develop standards together based on real use cases. Of course, apart from this consortium work, we also have own use cases that we run, for instance, together with Ethereum. There is one very nice use case which we can talk publicly about, as it's been announced and it's already very far progressed. This is the crypto bond. The crypto bond was actually developed within 4 weeks, so very fast for a bank. And this is basically the whole maturity, the whole life cycle of a traditional bond has been translated onto the blockchain. So everything from the indication of interest to the issuance, the automatic coupon payments, but also the maturing of the bond, all of that has happened or has been translated into the blockchain logic. We've done this with Ethereum because we really like the fact that you can introduce business logic in there, that you have the smart contracts component. We also developed a bond coin that actually does the settlements in the background. And this demo runs within 2 minutes, and it runs down the whole life cycle of a bond. And it's actually proven many of our assumptions that you can run a very large volume of actual bonds potentially on the blockchain. And it's very, very scalable already.
So when will this innovation, if you so will, hit mass market? I mean, how far away are we from it? And maybe are the estimates here all the same? Or, are some people a little more optimistic about how quick the future is going to roll around? What's your sense? I mean,
I'm very optimistic. Blockchain is currently online payments via Bitcoin. How many online payments, what is the volume of online payments with Bitcoin? Is it like Amazon, or is it small, is it big? It's 200 billion. It's a half of the whole US e-commerce annual. And it's growing by multiple 3 during the last 3 years. And what else? We have 200,000 transactions every day.
That's just Xapo.
That's just Bitcoin. And Bitcoin overtook Western Union. It's bigger than Western Union by now by volume. It's almost there where PayPal is. So I think we are very close to saying that it's already on the verge to mass adoption.
I think it's a fantastic technology, and I think it will definitely have a massive role to play in the future financial services industry. I think what's needed in the short to medium term are just a lot more prototypes, a lot more use cases that are coming up, because the main obstacle to Bitcoin or any of the cryptocurrencies taking off is psychological, because the element of trust is psychological. So I think that I'm not that optimistic it's going to extend into the broader society very quickly. I think within the geek tech community it's quite popular, but I think that will happen in financial services industry. I think in the other industries like e-mobility or the automotive industry or the food industry, it might take a little bit longer. I think, but the horizon that I would say that blockchain is probably going to have a few use cases which are going to be scalable is probably sort of in the next 3 to 5 years, which is not too far in the future.
So we can actually already show that we have the first project that has gone into production. We have donated the code of the smart bond that I talked about previously to an initiative called Heal Bond, which will actually try to issue a crypto bond for fundraising to find a cure against AIDS. So this is not something where UBS is involved in terms of issuing the bond itself, but we have donated the code. And the HEAL Alliance, who has been given the code, will work together with the regulator in the UK, I think, to actually issue this bond in a safe environment. So this is something where use case is very, very soon going in production already. Nevertheless, I do agree with you. Many people probably estimate the time in which we will have lots of products live in production, many different types of cash or security or assets digitized on the chain. This will take relatively long. It's more a matter of a few years, I think, than a few months. So it will take some time for standards to develop, also for regulators to actually start acting and making rules for this. So it will take some time, yes.
I think regulation is a very interesting aspect of it. How are you are both born global companies. How are you thinking and dealing with regulation around the world? Is that a concern? Is it, disruption at its best? So what does it matter? Where are we in terms of regulation? Not such a sexy topic, but definitely part of the financial industry.
So, well, I'm a developer, so I am not a lawyer, so I cannot really answer this question. But also I founded a company called Slockit, and we have lawyers, and we're asking them questions, what can we do? And usually the answer we get is, I don't know. And they really say, I don't know. And that's the problem. There are no laws about this topic, not much at least. So basically there needs to be, usually the startups who just go first, and then we see what happens. And of course, we need to be honest. We are very transparent, so that's a good part of it. We don't hide anything. Everything's on the blockchain. They can read what we do. But yes, we have a concern that we don't have the safety, that we don't know exactly if this is the right way of doing it or not. So that is a concern, and I think only time will resolve it after some court cases have come up and we have some decisions. But as regulatory problems are hard because it's a global problem. So you cannot only talk about Switzerland or Germany or any other or England. You always have to talk globally, and this makes it very difficult.
I think one of the other concerns about regulation is that what the blockchain does, it really changes society. It's a massive new societal and philosophical view of the world, because we are all accustomed to, whether you're in Switzerland or Germany, or maybe especially Switzerland or Germany, there's always a central authority. There's always someone there who tells you the way things should be. And most of the world's population has grown up with that. What blockchain does, it gives people the ability to work on ways of interacting with each other, to trade with each other, to pass money to each other without a central authority telling them that that's the right thing to do, or the central authority telling them, you give your money to me, I'll pass your money on, which is what banks essentially do. But for this trust, I will take a percentage of that money. So across the world economy, you've got middlemen who take cuts of everything. And what the blockchain does is take out those parasites in the system. Because now you've got a technology that allows people to interact with each other without that central authority. So it's really decentralized and transparent. So I think it's, for the regulators, it's a nightmare. For the lawyers, they have no idea what to do. And I think what Christoph said is very relevant. Let the startups go out and do it, and let the lawyers, etc., catch up, because it's a technology that really takes out inefficiency in the system. So the only people who are really going to be complaining about it in the long term are these middlemen who take a little bit of money from two other people who are really creating the value. They just take little bits of money all the time. And they're going to be the ones who are going to be trying to create the regulations and stop it happening.
So you're saying banks, right?
And not just in banks. I mean, if you look at the food industry, if you're a food company and you're buying coffee in Kenya and Tanzania, and you're buying a ton and you're selling 10 tons and branding it as that with the honey, for example, or you're getting tea. So expensive teas are a big industry. And if you look at the tea that's consumed in the world, it's greater than the amount of tea that's produced in these areas. But more importantly, for health reasons. So if you look at drugs, if you look at baby food, you have a lot of people who are injecting fraud into the system. And the blockchain can help take all of that fraud out. So it's important for special groups like mothers or parents, for example, be interested to know where food comes from. Consumers are interested to know where these things come from. If you're an investor in a company, you want to know what the value of the assets in the company are. So in a way, it creates transparency for the whole system, but there always will be losers, and those losers will be the ones trying to create the regulation.
Nevertheless, I do think that regulation also has its opportunities with blockchain. It's not just going to be a nightmare for regulators, it also has fantastic potential, because with smart contracts, regulators actually have the chance to have business logic and also regulatory logic put into the protocols, which basically mean that they could also move from more of an ex post view to more of a prior risk avoidance view, and actually acting before things happen. So they could prevent dodgy payments, for instance, but also lots of other things that are today very difficult to control. So I think it's a great opportunity also that regulators will certainly look to harvest.
Well, I know we've talked very much about the whole global piece of it, and boundaries don't matter so much, or only for regulation to some degree. Nonetheless, as a host of Digital Zurich 2025, and Switzerland being, well, quite a financial hub, also known internationally for security, I'd be very interested to hear, on one hand, from UBS, one of Switzerland's largest banks, what role do you think Switzerland will play in the future financial industry? And then I'd love to hear from the two of you, who are both partially, or at least with headquarters based in Switzerland, what relevance does Switzerland apparently still have, even for the future of the blockchain? So let's start over here with the present, and then let's go to the potential future.
Well, of course, we have our headquarters in Switzerland, and there are quite a huge number of very established, very large and experienced other banks that have their headquarters in Switzerland. So, of course, we see it as a great operating environment. We do see that it is apparently also a very attractive environment for fintech startups in general, but also for blockchain startups in particular, to come and establish their headquarters in Switzerland, which we are of course very happy about because it gives great potential for cooperation, and we get a lot from working with the startups, from the proximity of most of them being somewhere near Zurich, of the big financial centers. And I'm hoping that they also get a lot from talking to the financial experts that sit within institutions such as UBS, which are great sparring partners for their in the discussions to drive their business models and products further.
For Xapo, as being silicon-based company, actually, what is so interesting about Switzerland, that what almost no other country has in this way, is a long-standing tradition of banking. And also we say that blockchain is trustless system and we still, as a company, our customers need to trust us. And there is no better place to breed the new brand than being in the banking country, right? And also, you know, a very pragmatic regulator that is open to innovation. Not many countries where you find this one. Sure, political stability, neutrality, all those factors, you know, great talent pool. This is all unmatched, so that's why Xapo is coming here.
Don't want to add too much to it, but basically, yes, to have a regulatory framework where you can feel more safe, maybe, and because they are open and innovative is, I think, a good reason for Switzerland.
Well, thank you so much to all of you. I'd like to open up the floor to some questions from the audience. Do we have any takers?
Hi, I'm Thomas Pocek, University of Zurich. We're also doing some Bitcoin stuff, and my question is, if everybody's using the blockchain will explode. Currently there's a huge discussion going on about the block size, and I'm now asking if everybody's using it, if you have IoT writing data into the blockchain, will it explode? And how does Ethereum, how does Ethereum solve it? That's my question.
That's a very good question. I wanted to say it earlier, but I didn't want to go into technical details, so I avoided the topic. But when you spoke about mass adoption, it cannot happen today, at least not for the public blockchain, because of those reasons. Because right now the Bitcoin blockchain and also the Ethereum blockchain does not scale in the sense of 10,000s of transactions per second. So there's several solutions. The obvious one, the first choice today, is doing a private blockchain. Where you lose all the benefits we have talked about. They're not public, you can interact with each other and all of those things. Other solutions are currently worked on. The first thing will be proof of stake. I won't explain it here, but in about 1 year, Ethereum will switch to proof of stake, which should give us about 100 or 1,000 transactions per second. In about 2 or 3 years' time, roughly, we are moving to something called sharding. That's what we are planning to. That's what Vitalik Buterin has talked about at least. So if sharding comes, then we have a completely scalable blockchain. So this means right now we are still in the research of developing scalable blockchains. Ethereum is very fast to adopt and very dynamic. For example, today there will be a protocol change, so we are still able to do those. Bitcoin, it depends on how the future develops. There are those discussions. If Bitcoin is able to change their protocol, then it would be able to solve those problems. If Bitcoin governance and miners are not able to change their protocol, then Bitcoin as it stands today cannot scale.
Yes, I would add to that, you know, it's not that they are unable, it's just open source project, right? So there are a lot of very smart people with a lot of smart ideas, right? And what we're seeing now is an idea competition. Those folks believe the best way to scale would be this way, segregated witness, whatever. The other guy think it's this way. So basically, currently, it's the most productive period in our life, right? In the life of the system. Yes, we are trying to find out what is the optimal way to grow, right? And until it hurts, so now it doesn't hurt that much, right? So until it doesn't hurt, we can still discuss. At some point it will hurt and we'll need to reach a decision, and I'm sure we will. So it's just the way it goes.
one of the very important things as well with all of the research being done is, I think the amount of investment money being pumped into the blockchain is very, very important, because what that does do is to give the really brilliant guys on the ground the ability to work with it and try and solve those problems, because that really requires a lot of time. And one of the things that we are doing at EY is trying to sponsor people to help them to get those in place. Because one of the key things which I think we didn't really get into now was that to give people the concept of smart contracts, which is the integrated business logic that was spoken about. And for that, you can really help a whole lot of entrepreneurs if you have smart contracts that are already created, sitting there that they can just take and use for their startups. So I think there's a lot of research that still needs to be done, a lot of investment that needs to go in, before it becomes that sort of scalable nirvana that many people hope that it will be.
Maybe just to add to that, this is also why we are not so terribly concerned about scalability questions, because we see the technology developing almost week by week. So there are new discussions being held, new advancements being made. So it's just a matter of basically waiting for another couple of weeks or months until you have better scalability, more transactions per second, etc., which is very convenient because so much investment money gets poured into the sector right now. So this is something which is very, very positive, we think.
Quickly going to hand over the mic over here.
Hello, my name is Carsten Stöcker. I have a question to Annika. I'm working for RWE, and we are specifically concerned in terms of blockchain use cases, opportunity spaces, in the combination of blockchain, IoT, and physical delivery. And when a single transaction happens in terms of physical delivery, in a single moment we have a financial transaction and a physical transaction, and in this single moment two industries are just converging. The financial industry and the kind of utility industry, this example. So we as RB can easily take on heads-on the banks when we master the blockchain. And I'm very interested to understand what the banks are doing beyond banking and financial services in terms of use cases and even to break into other industries. Annika.
Well, what you were saying is of course a use case which we are not unfamiliar with. There are pieces like trade finance, where banks extend loans for exports and such things. There's the question of leasing. So these are perfect examples where the traditional banking business actually has touch points with the potential that Internet of Things brings. So this is of course something which we are watching very closely, which we are interested in cooperating with maybe even other industries with, which we strive to not only work with other banks but also with other companies that are relevant in that field. So yes, this is something which we are looking at, which we deem very, very important. Yeah.
All right. Any last question? Well, thank you so much for sharing the insights and also vision around the potential and potential performance increase that the blockchain holds for so many industries, not only the financial one. If there are any questions, I think all of you are still available. And thank you so much. Let's give a quick round of applause.
Thank you. Thanks.
Thank you.
Thank you.